back to our Money Making Monday. This is episode number 2 of our 250 to 10K journey in 45 days. I am Trill. I am the student of this assignment, and that is Coach Sophie. She is our coach, our teacher, our mentor throughout this journey together. So today, the market shall open in about roughly 9 minutes now. It is November 21st, 2022, and we're about to get ready to we're about to get ready to do our first contract. Sophie, what we got going on?
This morning we're actually going to place a put on SPY, that is SPY with the ticker symbol STY. Scroll down on your chart a little bit.
How much more?
Yeah. So we're doing this basically. This is a one-day reversal pattern, and we were waiting on confirmation to see whether or not the stock was going to go up or continue down. Pre-market, the stock is down, so we're going to place a put. Now, keep in mind, this is a very aggressive trade, so I don't recommend new traders doing this type of trade because it is what you would call a 0-day trade. And it's called a 0-day trade because this trade expires today. So we have to get in and out of this trade today. So go to your option chain. Go up. Now that's how you get to your option chain on Ally. And here in the middle, you have your strike prices, what's called strike prices, and each stock has a different strike price increment. And if you can see, SPY has a $1 strike price increment. You have your bid by ask price, and if you notice, you see how large the spread is on the bid by ask price. It's a lot bigger than the stock itself. Also, when you're trading options, you want to pay attention to your delta. In this second column right here, you want a delta of at least 70. The delta determines how much money you're going to make for every $1 that the stock moves. So also with options, you have an expiration date. Now, if you see right here, we're looking at December 16th. So I need you to go over here to select expiration dates to change the expiration date because we're looking for today. And in Ally, with options, you have weekly. Hold on one second. You have weekly options and monthly options. On Ally, they tell you, hey, this is a weekly option. It has that W next to it. If it does not have a W, it's a monthly option. And the one that was originally selected for December, that was a monthly option. If you notice, it didn't have that W. You see, that's the December monthly option. And options expire every Friday. SPY is a little bit different. They got options expiring almost every day. Most stocks have options that expire weekly. Most stocks have stocks that expire monthly. Not all stocks have stocks that are options that expire almost every day like SPY. So we can select that, just hit apply.
All right, we are there.
Prices
0 day.
are a little, the prices are a little different over here. Ally, you have what's called in the money, at the money, and out of the money options. Ally shades the in the money options, and those are going to be, the deltas are going to start at about 50 cents. So that 50 cents means you're going to make $51 for every $1 that the stock moves. Depending on the amount of money you got in your account, that's going to depend on you want to shoot for 70, but right now we're only working with $250. And we're also going to place a put because we think that the World SPY is going down today. So we need to look over here on the right side where puts, and it says puts right here. A put is what you want to buy when you think the stock is going to go down, and you want to buy a call when you think the stock is going to go up. So right now we're going to place this put. Now we can choose to, we're going to have to go out of the money because we only have $250. So we're going to have to choose this 396 strike price or this 395 strike price, being that the stock is already down pre-market. You want to give yourself a little wiggle room. So you may want to choose the 395 strike price, and over here where this X is, can you see my mouse?
Not see your mouse. I have the screen.
Okay. Yeah, because I'm all right. So yeah, select buy. And
All right,
this
we're
is how you're
selecting the
gonna
buy
place your trade.
at
We're gonna buy
395.
the 395 strike price, and this is a put. So next you want to scroll down. And here it tells you, just different information about the option contract that you're about to purchase, and hit trade. We got 3 minutes. So it tells you we only have $250 available. We are going to buy to open. We're buying to open one option contract. And remember, this one option contract controls 100 shares of stock. So just imagine this stock is $395, right? You're about to purchase this for $154 and you're controlling 100 shares. So you're buying, basically getting the stock on pennies on the dollar. So go up a little bit. Right, you're getting the stock on pennies on the dollar and making money while the stock is going down. Next, when you're a new trader, you want to make sure you say this stuff out loud to make sure you're purchasing what you think you're purchasing, because it's easy to click fast. It's easy to try to hurry up and speed it up. So you're buying to open. Remember that BTO, this is what we're doing. Buying to open one option contract.
One.
The expiration date is November 21st, 2022.
That's
The
today.
strike price is $395 and we're purchasing a put. The bid is $154 and the asking price is $155. Now I would want to bump this up to about $170 just to ensure that you actually get into the trade when the market opens. When you set this limit price, it basically tells the market, this is the limit I want to purchase this contract for. So now you can hit preview order. And again, it's just telling you it is just warning you, hey, you purchasing a contract that expires today. You're responsible for closing this trade by the end of the day. We'll close it. It's going to cost us $170 and you place the order. And then we wait for the market to open.
All right, since we got 1 minute for the market to open.
We just placed our first trade.
We placed our first trade. Now we have
and it was a put.
Yeah, we placed a put. Now, let me get this to them in layman's term. You gave them the technical term. Give it to you in layman's term real quick. Put. Just look at it like this. Layman's term, put. You put someone down. You put down someone. Look at a put in that way.
Phone.
Yeah, put it down. Now, call. Hey, you're calling somebody up.
Oh, hey, we in there. It filled. Market's open. It filled your contract. Let's see how much it filled it for. So if you notice, we went above the strike price or the
bid price,
the asking price. Right. We went above the asking price. So that, like I said, that will try to guarantee you get in when the market opens. So go to your dashboard and let's see if we can see how much it actually charged you for that contract. And see now it's down 91 cents. So we gotta watch it. Now SPY doing SPY things. This why I don't like. I typically, you kind of just got to ride this out. Right now, it's gonna take out emotional traders.
Yeah, we're gonna ride this one out for the duration of today because that's all we got is a day. All we did is put in for a day, so we ain't got no other choice. All right, so we back in the dashboard. It charged us once.
Yeah, see how I told you the thing with Ally, it acts up when the market open. It's been like that for years. The app is good because sometimes the app will be more updated than the actual website. But if you can see SPY's kind of coming up now that the market is open, but we'll just continue to watch it.
We're gonna watch the market. Welcome to option trading. Get ready to train your eyes. I say what's going on, world. It's your boy. I'm back with you one more time, one more again. I came in the house 2 minutes too late to close out a contract today. The contract that we opened this morning was SPY. So by doing that, I missed out a chance to close it out, make a couple of dollars. But it's cool because this money making Monday, SPY was doing like this. SPY is the ticker that we used this morning. It was going up and down. So let this be a lesson learned. Didn't really lose too much, but let this be a lesson learned to be very time sensitive. When you're day trading and option trading, you got to understand the market closes at 4 p.m. Eastern Standard Time every day. So that means I should have been back in this house by like 3:45, no later than 3:50. They gave me that little wiggle room in case I was experiencing some technical difficulties, and I could have one hand close out this contract, and I really wasn't paying it any attention. Left my phone in the house, so I couldn't do it from there. So it's a lesson learned today. But I got into some other contracts today. I got a couple calls out there today that's looking very well, but they expire on Friday. So I got a couple days to watch those grow, and they're looking very good right now. I'll share those with you tomorrow, and we will go from there. Hey, but always thanks for tuning in. If you haven't already, hit that like and subscribe button. As always, be great.